It's been a relatively flat day, and what do we do on a flat day? We evaluate where we're at, and we take a look at the few clues that we're getting on where things might be going, and cross-examine them against our current assumptions. And we actually got one of those, despite the market being relatively flat today, we actually got one of those that runs contrary to one of our big assumptions. And that's that interest rates are going to rise. We believe that's what needs to happen. Right now, as far as I'm concerned, interest rates are negative real. So that means when considering inflation, interest rates aren't just low, they are low and they are negative. And that is not sustainable in my opinion. That is not healthy. I think that will lead to more inflation and problematic scenarios. So we want to avoid that. But today, there was a U.S. Treasury auction and went very well, allegedly. So no immediate reason to believe that there's not enough demand for bonds out there, particularly Treasury bonds. We know it's also the case in high yield bonds, which are ridiculously cheap. I don't know how somebody can give a loan or own debt of a company that has a high chance of going bankrupt for only a 3 or 4% return. That seems ridiculous to me, but that is the current state of the market, which I don't think is sustainable, especially when there's inflation, so you're essentially getting nothing for that. Anyways, that's our cross-examining. One way, okay, demand's there today. Will demand be there tomorrow? We got to see, because tomorrow is the big day of the week. And this is a big week. This is not the very beginning of earnings season, but it's a big first week of earnings. We get the banks, then we're going to get tech. So, this is the moment of truth here. Is everything going to match up? And I think there's a good chance it does. We got to see. I think there's a good chance. We're going to find out. But tomorrow, we get Fed inflation data. I don't know how that's going to come. I have no insider information there. You don't know how it's going to come. We're just making assumptions. Tomorrow, we get some hardcore data. The trend has been, it's been hotter than expected and very high inflation. So my assumption is that's going to continue and maybe bond yields tick up as they should. Again, we will see what happens. Regardless, we're focusing on things that should do well given what has already happened. Tomorrow is not the instigation of anything. It's just the revelation of data. So we're going to see what happens tomorrow. And if everything is as expected for us, meaning hotter than expected inflation, the logical thing is that bond yields will tick up. So we're going to see what happens with that. We are remaining light on tech. We've had our tech. We spent, before the sell-off last week, selling off good portions of it. Still have some, but we're lighter than we have been historically. We're pretty heavy in energy. Adding my first bank at the end of last week, added to it again today, Santander. Not my first bank ever, my first bank of the current portfolio. Have had JP Morgan, had that very low last year in 2020. So, and Capital One. Don't have either right now. Adding Santander. So, that's the position right now. It's a relatively flat day. We're looking at everything though. Heard about the bond auction. Getting ready for tomorrow. And however tomorrow looks, we'll adjust. We'll take that data and analyze it. So until next time, until tomorrow, peace out.